All attendees are in listen-only mode.
RINM.
Good afternoon, everyone. It's Chris Catcher here, coming at you from the other side of the pond, namely London, and Gil Morales over in Playa del Rey.
Wet and wild Playa del Rey today, so we got a nice tropical storm coming up from the south.
Oh, nice.
Nice warm
surf's
rain.
up then, I guess, right?
Yeah, we got a nice swell too, so surf is up, definitely.
Excellent. Yeah, I remember Manhattan Beach. That's where all the surfers hang out. That's a good spot. And I used to live right next door in Hermosa. At any rate, this market is also on a swell here. We've got a nice uptrend seeming to be quite intact despite the negative news out of Apple. You'll all see that the market gapped down but then has recovered most of its losses, and in the case of the S&P and the Russell 2000 are actually up on the day. We also see that this prior gap up was a bit of a clue, mainly because that means all systems go in terms of quantitative easing and also in terms of the fears of the fiscal cliff that were laid to rest by and large when the tax issue was resolved. Now, in terms of the market direction model, we have a number of investors in the TNA or Russell 2000 related ETFs, since that index has been outperforming, and we also have some investors that are in the TQQQ or NASDAQ 100 related ETFs, and you'll see that that ETF gapped down along with the market this morning, but now it's coming up off its lows. Apple is not the only stock that makes up this index, and therefore Apple can head lower, but because the majority of weighting goes to all these other tech juggernauts, the index can actually catch up fairly quickly. Now, that said, there's nothing wrong with switching out of NASDAQ 100 related ETFs and moving your money into a more robust performer such as Russell 2000 related ETFs. That would be such as 1X IWM or the 3X TNA. So, and you could do that right now. You could do that today because in the longer run, based on the outperformance of the small caps, this outperformance should continue as long as the market uptrend continues. Keeping in mind that small caps do carry more risk, they are more volatile, and they tend to exaggerate the moves of their larger cap brethren, such as the moves made in the NASDAQ Composite or the S&P 500. Now, as far as leadership goes, it's looking quite persistently strong. We've seen a number of names do quite well in this kind of environment. We mentioned a few of them in our real-time reports, and you've got the home builders also showing signs of life. And this kind of environment with the Obama administration, the home builders seem to have that tailwind in their favor. Gil?
Yeah, some of the stocks moving, and the ones that we get a lot of questions about, Triple D, 3D Systems is definitely a very popular one. And of course, the question comes up as to whether this is a climax run. I remember there were times when you'd see stocks break out of bases and run up, and Bill O'Neill would say they're climaxy, but and then that might indicate that they're going to go sideways a little bit here. Did everybody hear me okay there? I noticed my system froze up. Did that come through okay, Dr. K?
Yeah, you were fine.
Okay, but anyways, you can see the stock. It's run up. Okay, it's up. This should be a blue day, but you basically run up 7 days in a row, 8 out of 9 days. But the question is whether you believe that this is a first stage base or this was the original base that it broke out of. But Dr. K, you want to explain why this is a first stage base?
Yeah, well, first of all, mainly, if you look at the weekly on DDD, you'll see that it formed a base from April 2011 till July 2011. Now, that's a bona fide base, even though it's a poorly constructed one, and then it undercut the lows of that base. So when that happens, you reset the base count. So essentially, the breakout on the existing base occurred on the week of April 20th, 2012. And so that would be your first stage base. Now we had a, let's see here. Yeah, we'd have a second stage base that started August 2012 and August 2012 to November 2012. So we're now at a second stage base situation in Triple D.
Now, could you say because the market went through a decent correction in here that you could be resetting? Is that possible? And also the stock came down something like 30% or more off of its peak.
Right, I wouldn't reset the base count except on the basis of the stock itself. In other words, the market could lose 50% of its value, but if the stock holds true, then you're not going to reset its base count. It just shows that the stock was just that strong.
Okay, so in this case, you wouldn't be doing it. I would say the bottom line is that at best you're coming out of a first or second stage base at the latest, and usually a climax run occurs after a stock's been running up a long ways. I actually thought that Apple would top in a climax run, but that wasn't the case. I guess everybody was just steadily loading into the stock as it moved higher, and there was never any rush to buy in at the end, although you notice a lot of people did get very bullish about the stock right at the top. But anyways, just focusing on 3Ds, we just view this as a sign of strength coming out of this base. We don't show them here, but there are also little black ants on some of our charts because we look at when a stock is up 13 out of 15 days in a row. That's usually a sign of power, and a stock will go sideways or pull back a little bit. When it breaks out to new highs, you can ramp up your position on that basis. We would probably be looking for the 10-day moving average, which is the magenta line, catching up to the stock. Maybe it goes sideways, but it can also just continue higher. So I think trying to sell into this, you may be tossing away one of the best leaders right now. But I think at this point, Dr. K, are we using the 7-week rule on the 10-day right now or the 50-day?
For Triple D, based on that viable gap up, we're still using. Well, right now we're really it's in the inception of it, so we're not using either. I mean, essentially, I would be using the 50-day if it violates the 10-day in 7 weeks or less.
So then the stock could pull back.
It's only been trading 3 weeks since that viable gap up.
So are you saying then that the stock could pull back 25% or more before you'd be stopped out here?
Well, see, the thing of it is, if it pulled back that hard, we'd be out of the position anyway, and probably it would be gapping down on us, so we'd be selling. Now, I know it's easy for the eye to see, oh, wait, the 50-day's way down there, so I don't want to give it the 50-day. But in reality, a stock will go up and down, back and fill, and the 50-day line over the ensuing days and weeks will have a chance to catch up. So that's kind of the rhythm of most stocks. And again, if this were to plummet in a period of a day or two, we would certainly be selling it out. You shouldn't be sitting in a stock that's selling off on such high volume to such a degree.
Yeah, I would agree with you there. Definitely don't want to sell it off. I think that would be a mistake. But I wouldn't mind seeing a yank back to the 10-day as a buying opportunity. I would tend to look at pullbacks here as a buying opportunity. I know that Will Danoff over at ContraFund, he was in IBD a couple of days ago talking about the position that he has in Triple D, which is a small position for him, but he likes the company. And Will's usually a pretty strong stock picker in terms of the fundamental aspects. So if you have the technicals behind it and you know that Danoff is in there and any other number of Fidelity funds are in there buying the stock and just starting to, say, over the last 2 or 3 quarters, which is what you see with Triple D. You also see that with a couple other stocks like LinkedIn, also, which is acting well, following the breakout. It's a slow mover coming out of there. But when I see that, that's usually a vote of confidence. And I should mention, we've been studying the mortgage servicing stocks, and there's actually several of these. There's NSM, of course, our old favorite, which is pulling back and making a lower low here following the violation of the intraday low on the gap up day. So, we bought some of this, but once it breaks here, we'll sell it. But I'm watching as it comes down into this area here because you're really on the top of the base here, and you've got this zone. So this whole area in here between 34 and 36 becomes kind of a pullback zone. And the stock's coming in today a little bit. Volume is only 4% above average. It has been picking up during the day, but the tide of the market is still to the upside, and we're just kind of watching this. But we're kind of nibbling in here to see what happens, and if it doesn't pan out and we see more deleterious action, then we'll back out really quickly. But it almost seems like you might try and nibble at this based on the other technicals, which are a breakout followed by a pullback. So you can blow off the Bible gap up at this point, but it is a breakout and it's pulling back into the base. And I would say it might be getting pretty close to a congestion area here that might be support for the stock. So just kind of watching how this develops. Another stock that we like and we talked about yesterday on the Pocket Pivot is Digitalglobe. I think this has some killer apps in terms of their geo-imaging capabilities, and it is used in a variety of areas, including the oil industry. And I'm not sure. I got to check into this. Maybe some of you know, but they might be able to use geologic information on their geo-imaging systems to identify areas where shale exists so it might be sort of a sub-fracking thing. But I think on a number of levels, this is interesting stock, and a huge volume buying on this, which I think was their announcement of a merger with Geo Group. That tells you have some nice institutional money moving into the stock. So that looks pretty interesting to us right now. Catamaran, which I've always been skeptical of. Dr. K likes it, so this thing is hanging in there pretty nicely and trying to break out. I don't know if you're going to get anywhere near enough volume for a pocket pivot, but the story looks good, and it's just starting to come out of this base. We think has some potential. So that's acting well. Valiant Pharmaceuticals is another one that broke out and continues to go higher. And of course, we're watching Triple D moving higher right now. Now, the big story, of course, of the day is Apple. And, as a short sale, it has established a couple of tops now during the trading day. Earlier this morning, let's see if I can find my 5-minute Apple chart. I was watching it come in, and I thought it was shortable pre-open in here, and then it breaks down. And remember, I've talked about this many times. If you're watching an intraday chart, and this is one area where an intraday chart can help you, which is on the short side, when you start to see a stock coming down, and all of a sudden you see a 2 or 3 huge bars on big volume, a lot of times that means you're going to hit a short-term bottom. And in fact, that's what happened, and you rally back up on pretty decent volume over the next 3 bars, boom, boom, boom. And then you hold the 20-period line, and now the 6-period EMA moves above the orange line, and so that gives you a buy signal. Now here you are coming back on a sell signal, and we'll kind of see whether this confirms to put out the short again. But you can kind of get a sense how you can bob and weave with this. And I think the one thing that's working against shorts in Apple, and I think has been throughout January, despite the fact that it's been weak in the face of a strong market since early January, since the start of the year, literally, is the fact that it can get dragged up, or you have the tide moving against you. So even though Apple's going out to sea, the tide is coming in with the general market, and it makes it a little more problematic. Also, everybody loves Apple. I've never seen so many vehement articles on seekingalpha.com on Apple before, people defending the stock. Yesterday I was on Bloomberg Radio with a couple of analysts, and for any of you who are able to catch the, I think we have the link. Do we have the link on the website, Dr. K?
I believe so. We do now.
Okay, but they're all going on about the dividend and the PE ratio and blah, 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 and why is Apple down but Netflix is up and Apple's fundamentals look better. They really don't understand the concept of money flows, but it's an interesting conversation to have with a couple of analysts who look at it the way that analysts look at things, which is frequently not the best, most optimal way, particularly with respect to our methodology. So, that's pretty much that story. But anyways, just watching Apple here. I don't know if I want to re-short it here. I'm kind of watching to see what happens here. You are trying to push up, and you're getting a little bit of a tail here, but this is still in play. And I still think if the market's strong, you can see it rally back up into resistance or the neckline, which is somewhere around, say, 480. In that area. I'm not really sure, but the thing you have to ask yourself is, do you want to be shorting an Apple? You could have an Apple short, I guess, while you're long several other things that are working pretty well. And my inclination is to trade it, so using my little short-term chart ski there. Anyways, what else we got going on? Lumber Liquidators is breaking out. Did they come out with earnings today?
Actually, they're supposed to. They were supposed to come out, I believe, on They're slated for February 20th. That's what it shows here.
Okay.
So no, they're not coming out with earnings yet. Actually, someone wanted to know about to comment on some of the pocket pivots over the last month, and then the ensuing base breakouts and how we interpret that. I mean, and essentially, LL is actually a great example. On the 17th, LL had a pocket pivot, and then today it's breaking out. So the idea behind pocket pivots is you're buying early in the base, and so now if you're buying, you can certainly buy it today. Preferably, this would be your second position, so your average cost is less. If today's your first day buying it, keep that in mind that a lot of base breakouts have not been working in the last couple of years. However, it does look like the markets are behaving in a much more sanguine manner than I've seen in a long time. So again, market context is very important, and we are seeing a strong market environment for the first time in really 2 years. It looks to me, based on the way leadership's acting and also the averages that are hitting new highs, new 5-year highs, and sometimes in the case of the Russell 2000, all-time highs. So it looks to me like we do have some blue skies ahead, but as always, just keep your position sizes appropriate to your risk tolerance levels.
Let's see. Let's look at some questions. People are asking about Commvault is trying to come out and break out here. It held pretty well along the 50-day moving average. I think the stock is consistent with the theme of what I would call big data, and you have Rackspace is moving today. I think Amazon also has been part of that. Whoops. Let's get that correct. AMZN. And that's moving higher today. So you notice all of these stocks are ignoring Apple. So Apple's no longer the big market stock it used to be, and like as we wrote this morning, we didn't think that leading stocks would have much to say about Apple other than probably just move higher, and that's what most of them are doing today. Amazon among them, Commvault also, but Commvault looks fine. I don't see any pocket pivots developing here. That's what makes it problematic. I did like the tight action though, and I thought you break out here and you're pulling back to the 50-day. Really your first pullback since the breakout. It could have been bought in here on that basis using the 50-day moving average as your stop. You're extended here and looking for a new buy point, so I'm not sure I would enter here. InvenSense. Uh-oh, I haven't seen this one for a while, but let's take a look at this on a weekly. You can see it's coming off the lows. You don't really have a handle. This is wedging a little bit in here, so you don't really have a handle on the weekly chart, but you can see it on the daily, and it's popping higher on the comeback trail. But you've seen a number of these semiconductor companies. Cree is another one, and they're coming out of low positions in their bases. Dr. K, question for you. Is this a viable gap up on Cree?
Cree to me, yes, Cree. Well, technically it is a viable gap up, and it's on earnings, favorable earnings report. And the earnings line is turning back around. It still is a lower quality name in the sense of where it's positioned. However, it's kind of one of those tough calls where I look at this and I say, well, yeah, it could be actionable. It could be a viable name, but I still want to stick with the best names, especially in any kind of market environment. It can be in a poor or strong environment. You still want to be the best names, and this name to me doesn't quite convince me yet. Now it has had the last 2 quarters of earnings have resulted in gap ups, so it looks to me like it could be turning around. And if you did want to take a shot at this, know your risk level is going to be undercutting the low of that gap up day at basically 38.27. And so if you want to take that kind of risk, that's a good, what is that? Like through
your ways down 7-8% from here.
Yeah, so again, it's not where I think there's better out there right now. But you could keep an eye on this, and if it goes sideways constructively, or maybe it retraces down closer to the low of that gap up day, it might give you a better entry point.
Yeah.
But don't confuse better entry point with poor stock action. So if the market's going strong and this one's pulling back, I wouldn't use that as an entry point.
Yeah, but we see semiconductors like that. I think NXPI is another one that has been trying to move higher off of a low position in a base. So there's a lot of similarity, and you see the semis turning like that. I think, well, a lot of these aren't in the classical buy position that we would be looking for. I think they do tell you that there is something pushing the market here that you have to pay attention to, and then the semiconductors are turning with the market. I think that's very constructive. And so to me that adds weight to further upside. I know this market keeps going higher, and it's hard to figure out why, because you wonder what is the underlying fundamental basis for a rally. Is the economy going to improve? Are Obama policies of more taxes and regulations actually going to create a booming economy? Well, we doubt it. But what's probably going on here is they're lifting the debt ceiling, and you're going to see an inflationary rally in stocks. And I think that's just something, you have to recognize that incredibly just massive amounts of monetary stimulus are still in the system, and they can create another bubble. And sometimes the bubble can be bigger than you think it is before it pops. That's how 1999 was. And even could be creating an echo bubble in the housing group, and that's why those stocks continue to go higher, even though we know there's a lot of in terms of foreclosures, there's a lot of shadow inventory out there. But for now, all of these policies and all of these moves that are being taken by financial institutions to push off foreclosing on properties and then having to realize the losses is creating something of an echo boom bubble type thing in the housing stocks. That's how we look at it. But it's real, and it's moving to the upside. So, hey, why not play it? And there are names to be playing it with, such as Lumber Liquidators and other stocks that we've talked about having viable gap ups. What was the other one? MHC or no? MTH. Meritage coming out yesterday. There's also MDC. That's another one. And they're just all over the place. Even lowly KB Home, which announced that it's in a mortgage deal to process or do mortgages with NSM, with NationStar Mortgage, which I think is constructive for NSM as well. Even that one's starting to move, and I think they're one of the few, or the only one with negative earnings growth. Anyway, someone's asking us about CSOD, CSOD, Cornerstone on Demand. Negative earnings growth, so it doesn't really attract me, thin stock. I'm going to try and rip through a lot of these. Last time we had a lot of questions, and we didn't get to them, which kind of sucks. This is a nice Fairchild Semiconductor. Here's another semiconductor breaking out, negative earnings growth. But you see the whole group. What I might do, if I see all this happening and you really like the turn, and I think this is a doable sort of trade here, is buy the, what's the SOXX? Whoops, what is the SOX?
Zero SOX?
Well, what is the ETF?
Hold on a second. SOXL is a 3X.
3X, yeah, there you go. Buy the SOXL and see if it launches out of here. Maybe that's a more diversified way to play. But I think the move in the semiconductors is constructive for the market. What is the proper way to draw a descending trend line? Also, what is the psychology behind why it works? Because everybody sees it. I mean, trend lines, to me, are more like art projects than anything else. So let's, for example, what is a descending trend line? You basically, where's my handy-dandy pen? You can connect tops, a couple of tops. So here's your descending trend line. Or you could connect them like this. See, that's what I mean when it's an art project. And you get different descending trend lines depending on which tops you want to use. But they're basically rough guides and nothing more. And because so many people look at them, a lot like the moving average is, they work. So, URI, United Rentals. I haven't really been a big fan of this group, but it seems to be moving along. And I guess, what would you say? If this is going to be a pocket pivot, Dr. K? Yes or no?
Based on today's, I mean, we're gonna see it as long as it can stay above yesterday's close.
Yeah, this isn't your traditional growth situation, but if you look at the earnings, you have 55% earnings growth in the most recent quarter and 67% sales growth. And the trend, say, over the last 5 in earnings growth has been 413, 213, 65, 47, 55. Next quarter, estimate 39% on 50 cents. Those are real earnings. Sales growth over the last 5 quarters is 25, 25, 58, 71, and 67. And that's pretty strong. Not a terribly profitable business, but I guess demand is growing. So, this is viable in terms of the fundamental numbers. And a lot of times the stock that you think isn't going to really perform is the one that does. So, not necessarily a bad stock. Not something we would look at. We're all hot for Triple D right now. So, and I like this DGI this morning as well. Thoughts on Baidu? Thought it would break out after Google's beat. I don't see the two companies as the same, but I don't see it as shortable mainly because we're not in a bear market. But you would keep this, being a weaker pattern, you would keep this on your watch list because you can see it's got a lot of overhead to get through, and you're up near an area of resistance. But I would definitely keep it on my watch list in case the market soured. So you want to be building your short sale watch list just to have it handy, not like you're going to run out and short everything, because I don't think you're going to make much money outside of Apple here. And even that to me is questionable because Apple could still rally. But I don't think there's any reason to try and short anything right now. I like this question. Frauds, interesting 1-star Amazon review. I should point out that the person who puts that up, and likely his cohorts, is an individual who lost money in my fund back in 2009. That was almost 5 years ago. And he had a couple $100,000 in the fund, lost $100,000. Threatened to sue us if we didn't pay him back, and we said take off. And so then he ran onto the internet and started slandering us. And I think this review is interesting because what it says is that we stole pocket pivots from Livermore, but remember that Livermore came up, what was the term, Dr. K, pivotal point?
Yes, pivotal point.
Yeah, and O'Neill uses pivot point, and we use pocket pivots. I don't know what that's all about.
Oh, he's just looking for anything. You know, he's grabbing at straws. You know, I came on board, and I didn't know who this guy was because it was one of your former guys who was invested with you. And I mean, as I saw the whole situation unfold, it's clear this guy has seriously malicious intention. I mean, you know, there's always going to be one out of every 1,000 that's just that's a bit of a wingnut. I guess that's the best. My friend used to say that. You know, when someone's just really a little bit. Colors of shades of psychopathic and tendencies,
yeah, it's pretty bizarre dealing with someone like that. But anyways, the guy goes out on the internet and starts calling me reckless and arrogant, and that I lost money, as if whatever he lost in the fund, I took from him, which is a bizarre thing when you're running money for people. If they lose money, somehow you're a hated person, you're some evil person who deliberately took it from them. And we try to avoid dealing with those types of people now. But I did turn around and sue the guy, and I sued him for libel and business interference because what he was doing was fishing for people looking for my other websites in order to get between me and my customer, interpolating, as they would call it, and trying to badmouth me without showing the full picture, which you can see on our website, which is that during my 11,000% run from 97 to 2005, I had several 30, 50% drawdowns. Even Dr. K had a 50% drawdown in 1999, and Bill O'Neill ran a fund from 69 to 74 that had a total return over 5 years of negative 54.2%. So I guess Bill O'Neill's also a fraud. But, you have a bad year, some idiot gets caught in your fund, and he turns out to be a jackass. What else are you going to do? So that's basically what that's all about. But I think people can judge our work for itself. And I talked about that fund and the issues that cropped up surrounding the financial crisis and the black swan environment we were in 2009. I talk about that in a chapter in our first book. So, we're not trying to hide anything. But, of course, you can see the guy has an agenda because he makes an absurd claim that, number one, we're frauds because Pocket Pivot we stole from Livermore's pivotal point, which O'Neill must have as well because he uses pivot point. And because I had a fund that lost money, big deal. Bill O'Neill had a fund that lost money, and Jesse Livermore went broke 3 times, came back the first 2 times, and shot himself the third. So to me, it's just a bunch of noise, and it's just an idiot and a malicious jackass who's just out there trying to slam us, and he has nothing coherent to say. Free speech is one thing. If you don't like the book, if you think there are valid criticisms, then put them up there. But just coming out with these claims of fraud that you could just as easily apply to Bill O'Neill, it's just malice, and that's all it is, and you just shrug it off and you move on. So that's
I think people, when they look at an Amazon review, they don't necessarily click on the comments because it'll show how many comments are there, and then you can see the whole discussion thread.
Right, but that fund was closed up when, Dr. K, something like at the end of 2009. It's been almost 5 years, and this loser, the only thing they have to do with their pathetic life is to do this, continue to do this. So if it makes them feel better, if it makes them make their money back, which I doubt very much, then whatever, knock yourself out.
All I can say is hopefully a guy like this who's quite misguided will get find his track somehow. I mean, And a guy like this is actually very helpful because it's instructive to other investors to see the psychology that goes on when you lose money and how bad it can get.
Right.
I mean, I don't think most people are as bad as him, but I think that people take shades of to the degree, not to that degree, but to some extent, and can sympathize with what he's going through, and therefore can reflect on themselves and use that as a tool to deal with their own emotions and their own weaknesses when it comes to investing money, because we all have emotional weaknesses. I mean, even someone like O'Neill has emotional weaknesses, and the question is, how do we deal with those weaknesses? So I'm glad that this disgruntled investor came forward and put up the one-star review, because then it opens up a great discussion for how do you deal with loss, and how do you basically make yourself a little bit more emotionally bulletproof, so you can deal with any drawdowns that might occur in the future. And they will. I mean, drawdowns are going to be guaranteed, and I would even add that most of the market wizards that have been interviewed by Jack Schwager or Michael Covell or on, or Kevin Martyr, most of these guys have had steep drawdowns, well in excess of 50%, and some of them, unfortunately, have blown up. Fortunately, we haven't blown up, but I think the blow-up is often, I've studied blow-ups. I've studied why an investor, a great investor, will blow up his account. And Robert Koppel actually wrote a great book on just that, because he used to be this high-flying investor with one of the top track records, I think, in the 80s and in part of the 90s, and then he just blew himself up. And it was because of his ego. As O'Neill always said, don't let your ego get out of control, and his did. And it was his undoing. And what's that guy? He blew up his account in 1998 when the S&Ps gapped down. Niederhofer, Mr.
Niederhofer, yeah, he was another.
I read his book. Actually, I read his book, and I thought, God, this is one inglorious bastard. He just really is high on himself.
Yeah.
I like the book. I like the story, but I would never recommend it for anyone. It was an entertaining read, but the guy was way over the top. And then it took 2 years later from the time I read his book to get the news that he'd blown up.
Right.
I think he took $120 million of his own and investors' money and just went negative with it.
Right. Well, all of this is a big distraction, of course, it's taking time. But I will finish out by just giving you guys the lowdown and the truth, is that when I sued this guy for both libel and business interference, I felt the greater charge was business interference. But what he did is got some Berkeley, we work for free, Berkeley activist law firm to file an anti-SLAPP injunction, this is a little legal precedent or something that's been used to keep large corporations like Philip Morris from suing people who say cigarettes kill and all this other stuff. There's basically a large corporation going after little people because they have more money. In this case, I actually felt this guy was malicious, and so the case got thrown out on that basis because I was deemed a public person, which means that being out in the public, I'm subject to any kind of verbal or other kind of abuse that anyone wants to heap upon me. But the Internet has changed the game in terms of how people can use it to slam people and to try and destroy people. And I think it's a lot of malicious intent behind it, and the law is evolving with respect to this in terms of the law itself as well as legal precedents. And so we're monitoring this. And if I do have another chance to sue him on this basis, rest assured I will take it to obtain justice, because I think it's a bunch of bullshit. And you can argue with me on that point, but that's my view. And I just think, fine, if you have free speech, then go out there and say it. But trying to use the Internet to fish for people looking for my business or interpolate between me and a potential customer to present a one-sided view that does not show the whole picture. And we show the whole picture of my performance while I made 11,000% from 1997 to 2005 right on our website, and you can see the drawdowns. There's nothing to hide there. So I will go after this guy again as the law changes, so he can be out there. The more he says out there, the more ammo I have to go after him later on. So that's all I have to say, and let's move on. But we've had a number of questions about that, and I would like to just clear it up. You're seeing with LL moving, you're seeing some decent action in some of the material stocks. USG had a pocket pivot the other day, but it's not really going anywhere. Let me remove this. Expedia, people are asking about. A little gap up move. It's a nice slow stock, just chopping along. Nothing really going on. Doesn't thrill us. You know what we like, and you can see it right here. It's moving again. moving higher. Hope that's not all you guys running out there and buying it. eBay is another situation where you have these slow growth big cap names. I think Oracle is similar because you're seeing money move into these steady growing companies like eBay, like Oracle, and they continue to move higher, but I don't necessarily see if we're going to have, well, we could have a pocket pivot buy point today depending on how the volume closes. It needs to be higher, I think, than, let's see, 1, 2, 3, I think higher than this bar here. Am I right there, Dr. K? 10,000,006 here, 10,000,678. So I guess higher than this bar, 10,000,678. It looks like it'll get there since it's only 8:38 in the morning, my time. So we're only about 2 hours into the trading day, and the stock seems to be moving pretty briskly. REGN, it is forming a double bottom. That is true. It violated the 50 days, so we punted, but I punted the stock here when it gapped down on this second gap, and I figured, okay, this thing isn't going anywhere right now, and I don't need to be hanging around with it. So in such a case, I just lose the stock. If it sets up again and issues a new buy point, which it very easily could when it announces earnings, I think in the next couple, 3 weeks, it could become viable again, but I would only come back on the buy point. And again, I don't care if I buy a stock 3, 4, 5% higher from where I sold it previously, because it doesn't matter where you buy a stock. It matters where it goes after you buy it. Okay, so you want to make sure you think about that regardless of where you're buying the stock. I know I was sidetracked a little bit before I was going into these mortgage stocks. Ocwen Financial had a pocket pivot here. All it's doing is pulling back into the 22-day exponential, which I'm using the 22-day exponential on my charts, the green one, these days. I find it a little more precise than the 20-day simple, although they're kind of interchangeable and they're roughly the same. But I should also point out that our buddies over at High Growth Stock Investor, Ron Brown and Ian Woodward, turned me onto the 22 exponential moving average, and I find that it works. So I just shifted to using that. So, and actually I'm not using it on this chart. Let's change it, and you can see what I'm talking about. 20-day, we're going to make it an exponential, and you can see that, like OCN, it dips below it, but it's trying to hold above it. So you can kind of use the two interchangeably. They're roughly anywhere around there. I look at a pullback to a 20-day, depending on the context of the overall chart. Sometimes it can be helpful, and I've used a 20-day for a long time. So Dr. K has not. He uses a 10-day on a short-term moving average. So, but in any case, Bonanza Creek Energy. This is a pretty exciting little oil company. Is it not? Is that what that is? But yeah, it is. But yeah, earnings growing sharply. It's pretty thin. Let's see. Looks like you had a pocket pivot right here. So there's a secondary buy point there. If you bought it further down in the pattern, you could add to your position here. Cores, I'd like to know what is up with this stock. I was watching it this morning, and let's bring up the handy dandy 5-minute chart. And this is what I don't. What's going on with this thing? It has a big jack on big volume this morning before the opening, so it's gapping up before the opening on big volume, and you see several upside spikes as it moves higher towards 57.50, and then it just kind of fizzles out. So probably now it's trying to turn around intraday, and it's going to go back up. Who knows? But that may be what it's doing. So if you want to come into it and you like this 3 days of action here, to me it's a little bit kind of up there, but it's right up against resistance here. So earnings are coming out in the next, couple of weeks? What's that one, Dr. K? When are earnings coming out? Second week of February, is that right?
Well, that's right, yeah, second week of February, the 14th, if Wanda's right here.
Someone says, are you following or own KKD? I did own it, and I sold it up in here because I thought it was smart, and I'm pretty stupid on that basis because I missed out on another 15% a move here. This thing's going crazy, but I think the stock can get to $20. It trades about 1 million shares a day, I think 1.3 million, and it's on that basis it's kind of thin because I need to own 40 or 50,000 of it to have a meaningful position. If you own 10,000, that's great. And you're pushing along here nicely, and it's acting well. So it's just a hold. I think you'd use a 10-day maybe as your selling guide. Dr. K, how would you handle this at this point? Would you just be hanging out and letting it go higher and looking for what would you use as a selling guide at this point?
Yeah, I mean, this to me looks like you'd be using the 50-day, but actually you use the Bible Gap Up Day, which is at a higher price. That's on the 4th.
Right.
So you have a Bible gap up there, and if it were to come all the way back and undercut that low with no porosity, then you'd be out of it. That's at the worst situation, and clearly would have violated the 10-day. It violated the 10-day in late December, so I would normally use the 50-day, and it is a retail stock, so it's going to be probably trade a bit in a wider band, as a lot of retailers do. But you got that Bible gap up there, so that's your worst case scenario. That you would sell it at that level. And again, it's not going to just come straight back down to that level. If it did, certainly something would be wrong, and you would have sold it before it even got there.
Right.
In the meantime, just wait it out and see how it trades. And that it is a retail. It's going to be a bit wide banded. If you look at the weekly on this, it does have its share of sloppiness. It does get into its trends though, and that's the thing is, I mean, the question also comes to, well, here's a stock that's made a big move in a short time, and how much more upside does it actually have, given the nature of the business?
Right.
So you keep that in mind as well, and you might want to take some off the table if it gets too far ahead of itself. And then again, because it's a sloppy, it might trade sloppy. You could buy that piece back if it retraces in a constructive way.
Let's run through some more. TRN, the rails are all doing well. UNP, these aren't things that we normally look at. But it's CSX, I don't think. Yeah, even with a lousy earnings report, it's moving higher. So I think TRN, Trinity, supplies rail cars. Is that correct? Yeah. And so it's moving along with the rails, but we haven't seen any real buy points up along the 10-day. Never had a pocket pivot, but it's moving higher. It looks fine. Somebody says the underlying fundamentals for this rally is magic pixie dust. That's true. It's a lot of liquidity, but keep in mind in 1999, .com stocks would go public and be up 50 points the first day of trading, or even they just have 50-point up days as a matter of course during their moves. And I remember a lot of old timers talking about everything moving on pixie dust there. So, I guess pixie dust is okay as long as it's your own pixie dust. So 99 was a great year for us, and while a lot of old timers said it was a pixie dust rally, we made a ton of money. So people keep asking about Envision, or InvenSense rather, INVN. Is this a pocket pivot? Actually, this was here, but we don't really care for the stock on the basis of it's got one earnings report up 46%. I guess that was last night, and they're trying to turn the corner here. But our thinking on this is that you're low in the pattern. It may come up and build another base here. I'm not sure I'd buy this, but if you want to, you can try it, but just keep your stop. All this money printing, someone says, and raising the debt ceiling, but GLD can't get above the 50-day moving average. What is this telling us? I think in silver's case, it's telling you that you just had a nice big upside move. So it already was telling you, I think, off the lows after this big gap down, that there is a QE factor still in here. Now you have a normal pullback. I think the focus is on stocks right now, and I'm looking at some other commodities. Gold is hanging in there. Let's take a look at copper futures. Copper's looking okay. I think you're looking at a potential turn in silver and gold in here. Backing off of their 50-day moving average after running up. Not sure why there's any selling, but it's really not that major in my view. I mean, it doesn't look like it's the end of the world. What's your take on the precious metals, Dr. K?
We're in the basing pattern. Silver is up above its 50-day as of yesterday. Now it's right at its 50-day, and that just looks normal to me. I mean, in the basing pattern, these things are going to be sloppy. The question is
basing.
how much QE is going to how much QE is going to affect these names, and it should be quite substantial. But in the meantime, with QE being a constant, I think these names are going to have to back and fill for a while, maybe for a while longer, before we actually see them set up and go. That said, the way silver's looking, if it were to start making a move to the upside, I might almost take that last. If you look at it's almost like a double bottom base here from late September to present, and if it were to clear that midsection at 33.31 on volume, I might add to a position. Hopefully, it would have issued a pocket pivot before then, so that I could start at a lower cost basis.
Yeah, so we're just
Keep in
watching
mind that silver is, what is it, ratio is like at 65 or 56 to, it's at, I think, historical highs. So silver is better bang for your money once these things do set up and go.
Yeah, and I also think if people are worried about the dollar, they'll gravitate more towards the poor man's money, which is silver. So we'll see how this goes. I heard that the U.S. Mint, in fact, I think our friend Dave Eccles sent that along, the U.S. Mint ran out of silver eagles. Anyway, soda, somebody says, I took a look at soda as having a pocket pivot on January 22nd. Yeah, you could look at that as a pocket pivot. Our view, though, is, again, here you're in this low pattern, so we don't really care much for this. But it's acting okay. So if you're buying it and the technical signals are working, then more power to you. Go for it. Rex, again, we already talked about as a pocket pivot. We sent that out. SMH is the semiconductor index, right? That's another one of them. So, like I said, if you're looking at the whole turn, I think you just look at it, the strength in semis as being positive for the market, and also a reason maybe to try buying the SOXL or the SMH, which is the other ETF. Can we consider yesterday's move in cores as a pocket pivot? No, the volume was not high enough. I don't think it exceeded the level of what would now be 6 trading days ago. So,
right.
But it's holding the 50-day, and it's. I've been looking at this for a long time, and I'm wondering, am I looking at one base here, this big ugly base on top of this base, so it's a giant base on base, I think going out 10 months, or am I looking at a shorter term, about 4-month pattern where you have a base here under a base, but now you're starting to come out of it. So, you're probably setting to move higher. I know Coach got ripped apart yesterday, but I don't see cores and coaches being in the same league, so to speak. So that's my take there. Somebody talking about this crank putting the fraud review on Amazon. Somebody says he probably also bought Apple at 700, probably. I like this one. I made sure to put a reply to that asshat's comment. Someone says he sounds like an angry moron that blew up his account. I think what happened is, in this case, and I think that's something for everybody to learn from, is that when you go into an investment, and if somebody invests in my fund or Dr. K's market direction model, and you go into it without any real sense of how you're going to control the risk, or even the risk that you're getting into, and you have some idea that it's just going to make you 11,000 or 18,000% in a straight line, and unless that happens, the person running the fund is an evil, arrogant, and reckless individual, then you don't really understand what you're doing. And I think that's really what it boils down to. And the other thing is, while people can teach, and that goes for everybody from us to Bill O'Neill, and even Scott O'Neill. I know I've heard people criticize Scott teaches, but has he ever had a huge year in the market? I don't really think that's relevant because Scott knows the material cold, and I think he's fully capable of teaching it. And I think we have some lessons to teach as well, and I think we're very upfront talking about, or at least I was, talking about that fund and what happened in the first book. So I got nothing to hide. The truth is not my enemy. That's all I have to say. But anyways, appreciate the support from everybody. HLSS. But, you guys know where we're coming from. We get up here and we show you our pain and our pleasure. So HLSS, you have this pocket pivot here. And I'm not sure what IVD is talking about the breakout point being that I guess they use the peak here at 2046 plus a dime, which I think is pretty arbitrary. But I guess it's Bible here. I'm not sure if this is the heater in the group. I like the move, and I admit to buying the stock, and I set a $20 stop, and once it hit that, it just had to hit, I'm gone. I'm just not going to mess with it. I think NSM might be more dynamic, and I think the other ones, OCN, it's the same thing. I think what's interesting is Core Logic. I've noticed the sponsorship on that looks better, and you're seeing, I know Fidelity's been moving into it, but you do have this V-shaped formation here. Another one, Walter Investment, a little bit thinner stock. You had a gap up here, but it's basically just building a cup of the handle, so it doesn't mean that it's evil because it dropped below. It just means that if you bought on the basis of a viable gap up, the same thing goes with NSM, that trade is off the table. But as they pull in here, they could just be pulling back to the tops of their bases. And the same thing goes, let's say, with WAC. It's just pulling back to create a handle in a cup with handle formation, and it's a better position here building a handle. So I think a lot of these you'll just see what happens coming out of earnings. A lot more comments. Somebody says, let's have fun. Some of us need your attorney's name to protect their blah, blah, blah. HLSS coming up. On a PP count, do you count today as day one? I'm not sure. Day one on what? Somebody asked us, do you ever buy penny gold mining stocks? Don't ever buy any penny stocks. So they did buy a stock, apparently, FG, or they're talking about FGLL. This probably won't even come up. FG up, nope, there it is. Well, it's up, they said something like it's up near 900%. Well, it was, but it isn't anymore because it looks like it came right back down over the last 2 days. Penny stocks, you just want to avoid them. If a stock is good, it'll be an institutional stock. Retail stocks are leading today, but volume very low in most. What do you make of this sector? I think it's kind of a mixed bag. You've got some acting reasonably well, say like cores, but others not, and you better know what you're buying. But the group, I think, has dropped down to like into the 70s or 80s in their group industry rank, and so I think on that basis, they're your lesser picks. Like I said, just give us Triple D and maybe DGI, and we'll be happy with those. And LinkedIn, that's another one. So someone asked, is there any way to gauge the overall direction of a stock when the market opens from checking out its pre-market activity? I would say no. You got any comment on that, Dr. K?
Yeah, that's very tricky, really tricky. I think you end up getting fooled and misled by pre-market action more often than you can predict it. That's been my experience. That said, there might be some pre-market experts out there that have seen certain patterns evolve that are profitable. I just haven't seen them, and it's kind of like on an intraday basis. You might have a system that works in very certain specific circumstances, and that there could be such a system for pre-market, but I haven't seen any. It's just stock is often too thinly traded and subject to manipulation in the pre-market hours, so I just generally stay away from that.
Unless it's a thicker stock, like Apple trades pretty liquidly or pretty liquid before and after the market. So somebody says Splunk forming the famous mustache pattern. We call this a double D bottom. Yeah, it's trying to come around. I've always been intrigued by this company, but nothing really setting up here. You've got some movement here, maybe a bottom fishing pocket pivot here, but not still so early. How much of today is just Apple money migrating into other issues? And do you think that can provide us a lift for several days? No, I think money is just flowing into stocks anyways, and obviously money is going to be reallocated out of Apple and into other stocks, and of course part of that movement will occur today as well as over the next several days. So I don't necessarily know that it creates a lift for the market or not, because I already think money is coming into the market. So it's just adding to the general fuel into other stocks. Yes, Aruba Networks on the comeback trail. Trying to break out today, but again, you have another one coming out of the low positions. These will tend to be your laggards, okay? So you want to go for the big true leaders breaking out. Can you comment on VMed? Whoops. Someone asked, it's just moving higher. There's a pocket pivot here, which we identified several days ago, and it's just trending higher. Nice steady uptrend. Any comments on FAST? First American Financial. Whoops, not far. FAST. It broke out here, so that there's no volume on the breakout. I don't know what to think of this stock, so I don't really play here myself. There are better leaders. How do you play these shakeouts like URI this morning? It depends on what you said as your selling guide. That's a pretty steep drop, but what I would do is if I got shaken out, I might look at a pocket pivot to just get back in. So, like I said, I don't care where stock or where I buy a stock. I care about where it goes after I buy it. So that's what you need to think about first. Yeah, I did sell the HLSS, but I've taken a small position just to test it. And sometimes when they're thinner stocks, I don't really mess around with them. You lose 30 cents, not a big deal, but that's just the way I operate. So it doesn't mean that you would have to Somebody says, I thought you would wait for a confirmation for a close below the intraday low. You could and you may not, but my thinking was if it's a breakout it should hold 20, but it's a volatile little stock, and it really depends on how you want to handle it, and that's how I handle it. When I buy a stock that's breaking out, I don't give it much room because I'm always, if it pushes back up, and let's look at this again. If it does push back up and it's acting constructively, there's no real buying volume on this today, by the way. I can always just jump back in and buy it. So I'm not, but I don't like this kind of spin out. I thought that was a little bit flaky. I remember there was a big block of stock going off, about 140,000 shares, just hammering the stock all the way down to 1961. I watched it go there, and then as it rallied back up to the 20 level intraday, I just unloaded it, took a small loss, and moved on. But I don't really care for that type of action, so I don't mess with it. Doesn't mean the stock won't go higher, and if you're using a different stop, then you're still in the stock, and you're probably up a few cents. But you know, who cares? When you own stocks that are moving up 4, 5, 6, 7, 8, 9, 10% a day, you don't need to worry about owning a stock that really isn't doing much anything like HLSS. Doesn't mean it's a bad stock or that it won't move later. Ruckus Wireless, you had a pocket pivot here, immediately reverses off of new highs, and it's just moving higher. So good story, but I don't see any entry points here. Oh, on the pocket pivot count, do you count today as day one when counting back 10 days? No, you count yesterday, the prior day, as day one. Here we go, fertilizers, CF, you had a pocket pivot here, it continues moving higher. POT is trying to come up out of this formation here. It's the dog of the group, so you don't want to mess there. CF probably stronger, but I'm not so sure that's where I want to play. But acting well in Monsanto, same thing. So moving higher. I have a friend, a Stanford friend and still a good friend, who is one of the top researchers at Monsanto, and they're very happy to capitalize on the global warming policies of the Obama administration to sell their drought and heat-resistant seeds to third world countries. So take it from there. Monsanto is also the largest lobbyer in Washington, D.C., so very powerful company. Anyways, but that's the party line over at Monsanto. Global warming, the global warming industrial complex, which is made up of Monsanto among other companies, will benefit from global warming, quote, policies. So anyways, we can argue global warming another day. VMED is a great looking chart. What is the fundamental story? I don't know. Anything Richard Branson owns has got to be cool. That's all I know. Silica Holdings, this is just coming up the right side of a cup. You had some viable points in here, but it's very choppy, and these guys are going to benefit from fracking with the sand that they provide, but it's just kind of coming up in a big cup, and maybe it forms a handle, and it's only a $19, $20 stock. It might be better waiting to see how it acts as it builds a handle, so I wouldn't be buying it here. Celgene is extended, but there's one thing that Celgene brings into play, and this is the first time Celgene has ever gone up to the 100 price level, so it brings in Livermore's century rule, whereby you could buy a stock on the basis of it pushing up through a round number like 100, 200, 300, 400, 500, etc. for the first time, and you notice it runs right into it and backs off, but watch for it. If it does push up through, that might bring the rule into play, so don't know. But Celgene's been one of the strongest stocks. How strong of a chart is ASGN, I guess? It's pretty choppy. So, I think if you're going to buy a stock on the basis of employment, and these guys are temporary employment, I think there's another one doing well. Is Robert Half of temporary employment, RHI? Yeah, that's been doing well. They do a couple other things as well, but I think LinkedIn is probably going to be your more dynamite play on this. That's what I think. And you're coming out of this cup with handle. I bet you they go up on earnings. I would own a 10% position of LinkedIn going into earnings. Do you see DGI still within viable range? No, I think it's extended from yesterday, but we gave it to you yesterday right above the 28, 29, right around 28, 29 level, and that's kind of the buy point. Do you think this is extended, Dr. K, real quick?
Yeah, relative to the chart. I wouldn't be touching it up there. Just wait for a potential pullback.
Okay. HCA, whoops. Medical stocks continue to act well. This is just up there. There's nothing really to do. You got to break out. It would have to pull back to be viable. Let's see. RNF, this is Rentec fertilizer moving along. Rentec Nitrogen Partners, basically a fancy term for fertilizer makers. It's up there, and it's just kind of chopping around, so maybe it needs to settle down and build another base. But, you know, it's gone up pretty good. It looks like over 20% in about 2 weeks, so you might give it more time. So another great signal on January 10th for Dr. K UVXY model. Dr. K, you want to take a bow on that one?
Well, let's. I don't want to bow too quickly here.
Right.
The model's almost at a beta test. It's looking better and better. So, you know, but keep in mind, it's a volatile model. As you can see, it had a couple of back-to-back signals that that caused fairly substantial losses. So you have to position size appropriately in this model, and I do believe as we move forward in time that the numbers will play out as expected. So, you know, let's just keep our fingers crossed. But so far, so good.
Someone asked, is it too late? I'm just going to finish off with the last two questions because it is just after 9. 3D Systems, is it too late to buy? Well, I don't know. If you consider this a viable gap up, which to us you have one here, and then which was the first viable gap up, and then you have the second one. It's getting a little bit late here, so it might not work right away, or it might flip down and, you know, test the 10-day or something on a pullback, but just building a consolidation. So I think it is too late to get in the terms of there being a low risk buy point. But if you did buy it, you could buy it here and use the low here, which is what, 67.18 as your selling guide. If you want to come in here, it could just continue to go higher, but it might just chop sideways for a little bit. So take a small position and use that as your stop and just give it a whirl. And I'm adding to our position here today, so just a little bit here. And then finally, somebody says, important to note that global warming remains the #1 threat to unicorns. Uh-oh, my daughter is not going to be happy about that. Somebody says here, I bought Apple. I don't know. We talked about earlier, DDD is not in a climax run, somebody's asking. Last question before we close it up here. I bought Apple years ago at about $90. Well, I'm still up almost 400%. Am I an idiot to hang on to it here? I'm not going to get into any name calling here, but I think that there were sell signals a long time ago off the peak, and you could have at least taken partial profits. #1, when it broke down, you notice there was a little mini head and shoulders here, and when it violated the 50-day moving average, that was your selling guide. So that's when we said to sell it initially and even short sell it, and it went straight down from there. And so that was really your first sell signal, and then now you're breaking down through the neckline of this big old, I mean, that's what you look like. If you look at this on a weekly, okay, this essentially looks like you're just getting started on the downside. So I think if you're worried about it, take half off the table and lock in some of those great gains, and I congratulate you on buying the stock cheap and holding on to it. I certainly didn't do that. Neither did Dr. K. And, be happy about that and just limit your risk. But I think at this point the stock is probably topped for good, and I don't think you're going to see it return to those heady days of, the last several years since 2004 when it started its move. So anyways, on that note, that's all I have to say, and hope you guys are able to survive today's terrible market as a result of Apple. You notice no real Apple effect, so it's all just noise for the market and gets everybody excited. And I thought if you saw leading stocks pull back, Dr. K agreed on this morning as we wrote in our pre-market pulse, that you could use constructive pullbacks in stocks, leading stocks, to take positions. So not many have pulled back today, however. Anyways, everybody, thanks for showing up as always. We love you, and we'll talk to you later. Good luck.
So long, everyone.